Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up and on YouTube for you to watch. Now, if you're not on my free email list, go into the description of this video and you'll see a link to join it. Then every single morning before the opening bell, you'll get an email from me with my market commentary and links to the top stories of the day that you need to know about for every trading day to be informed about what's going on in the markets and what's looks like is coming up ahead of us. And that goes with this interview. I talked today with Jordan Roy-Byrne, who runs the website, thedailygold.com. I've known Jordan now for several years, I think 10 or more. And he's one of the top gold experts that I know when it comes to using technical analysis to figure out and forecast where things are headed. Now, I own gold. I got roughly 14% of my money invested in gold as a core position. And I know it hasn't gone crazy. It hasn't gone to the moon this year, but it's up. It's up year to date, while even with this bounce of the past few weeks, the stock market, it's down year to date. It's helping me weather the financial storm that I think has only begun for the financial markets. But when is it going to go up big? That's what I turn to Jordan for. It's why I talk with him. I want to get his forecast on what is he sees in the charts and the trends so we can figure out, should we even be buying more gold, more silver, more mining stocks? What should we be doing? So here it is. On with Jordan Roy-Byrne of thedailygold.com.
Hey, I'm great. How are you, Mike?
Good. Well, it's been a couple months since we've last spoke, and you specialize in gold, silver, and the mining stocks. I've been following them closely for years and are a master in technical analysis and reading the trends. I do link to your stuff from time to time. But I wanted to get your take on what's going on so far this year in gold and silver, and where do you think things are headed? I mean, we saw a nice rally in both in the first quarter. Gold went up to 2050, and then it came back down briefly below 1800. That's around 1850 now. It's still up year to date. It's still outperforming the stock market. But I got to say, I do feel, at least from people I talk with and, the type of emails I get, that a lot of interest has just gone away. It's not moving as fast as people would want one way or the other.
Yeah, I mean, technically, if you look at gold, it's still in this super bullish cup and handle pattern. We're building the handle on the cup. I mean, the cup was 2011 to 2020, but since the August 2020 peak, we've been building this handle. And in a larger sense, it's very bullish because gold has been able to hold above the 38% retracement of the move from the low around 1050 up to 2070. So 38% retracement for that comes in around 1675, I think. And so gold has been able to hold above that. In addition to that, when you look at the cup, the right side of the cup is higher than the left side. So these two factors tell us that this is a very, very bullish cup and handle pattern chart in a long-term sense. The measured upside target is 3,000. The log target is anywhere from 3,700 to 4,200, depending on how you measure it. And, I've looked at historical cup and handle patterns in other markets. There's not that many. But in every scenario, the market, after breaking out, has been able to go from the measured upside to the log target in a period of 6 to 12 months. So if and when gold is able to break out and move above 2050 or 2100, wherever it is, there is a potential for a real vertical move. So in the big picture, things are setting up. They look super, super bullish. However, near term, we're still in a correction. Since the 2020 peak, it's almost been 2 years. And that's the handle on this huge cup and handle pattern. And I mean, gold could come down to, the low 1700s or maybe the mid 1700s, and it would still be in a super bullish cup and handle pattern. In that scenario, it will not violate the lower levels of the handle. So that's kind of the short-term and the long-term outlook. And then we have to think about things like macro. And, the last technical thing I'll mention is, and this is important, gold has turned up against the S&P 500. So that ratio chart is very important because for gold to have a real big move in a real bull market, it has to be outperforming the stock market. And so gold against the S&P, that ratio has turned up since the beginning of the year, and the ratio is still above the 200-day moving average on that ratio. And the moving average is sloping higher. So that's a very good sign. I do see similarities to 2000 and also 2008, but more specifically 2000 and 2001, because before gold bottomed, which I think was in March or April of 2001, months before that, the gold to S&P ratio, that had turned higher in gold's favor. So gold outperforming the S&P 500 is a leading indicator for gold. And, I think that the catalyst potentially could be, looking out later this year. It might sound preposterous, but it could be the Fed having to shift its policy and to ease policy and cut rates again. And, right now we're kind of having a tug of war between inflation and growth. So we're in a stagflationary situation where we know inflation is high and we know growth is low with a threat of recession coming later this year. But right now, the main issue is inflation. And so that's negative for gold in the short term. That is forcing the Fed to implement tighter policy, essentially. They want the stock market down. They want inflation crushed because politically, that's what everybody's concerned about right now. And so over the next couple months, that's negative for gold. However, the issue is they keep hiking and something breaks and, the economy has real problems and it looks like a recession is coming. Inflation will come down in that scenario, and then the focus of everyone will be recession and growth more so than inflation. And so when you get to that point, that's when the Fed is going to shift policy, when they have to stop hiking and eventually turn to easing. And it sounds ridiculous with inflation high, but even in 1974, I was just looking at this history, the Fed started cutting rates when inflation, even like 4 months before inflation peaked. So I think, this is one potential scenario where later this year, something breaks, the market, we're having a bear market rally in stocks right now. Studying the history of these bear market rallies, they can last into the, 7th, 8th, or 9th month, which would be, what is that? That would be, July, August, September, kind of that time frame. That could be when this bear market rally could peter out and the market could potentially roll over again. And so if the market rolls over again after this bear market rally, that's going to be a sign of recession, and that's going to be a leading indicator for interest rates turning lower, inflation turning lower, people getting concerned about recession, and that's when, the Fed will have to ease policy. And, gold in the last 25 years or so, it's done really, really well when the Fed has started cutting rates. So that's my outlook on gold for, the remainder of this year. I think, we could have a difficult month or two coming up here, but moving beyond that, I don't think the Fed is going to be able to hike for that much longer. And, that could set up gold for a really significant move higher.
Well, you mentioned as far as the difficult angle possibility that gold could fall below 1,800, maybe down to 1,750 or 1,700. And personally, I've got an investment allocation in my portfolios of my real money of around 14% dedicated to metals ETFs. And to me, I'm happy to have done that when the stock market has been so bad this year, and even with the dip in gold, it's up year to date. But I don't really feel confident to know which direction it's gonna go in. But if it were to dip down to 1750 or a little lower, I would be buying more. And if the stock market pulls back, which I do think, I feel like it will, I'm more certain of that than gold pulling back. But regardless, whenever the stock market has another pullback, goes through the recent lows, if gold and silver are holding up and not pulling back as much as the S&P is, and the mining stocks are doing the same, or at least the GDX, the big cap mining stocks, I'd be really inclined to even buy even more. Because if things, what tends to hold up when the stock market pulls back tends to do really well afterwards. The problem with this, though, is most people that got in the markets like in 2020, they just want to hear something that can make them a lot of money in a week or two. And I don't really have any ideas on that. I don't. Do you?
No, there's really no legal or moral and ethical way to do that. You probably have to engage in some kind of crime or law breaking to figure that out. There's just no way that's possible. But you're making a great point about the precious metals and the stocks holding up better than the S&P, and that's something really interesting to think about over the months ahead. If we do see the stock market weaken and roll over, but at the same time, precious metals are holding up very well against that. That's just a really, really good sign, because that's a precursor to bull market moves in precious metals. And it's interesting with Fed policy, Mike, because or go ahead. I cut you off. Go ahead.
I'm cutting you off. I'm just saying. I'm also riding your theme of the gold S&P ratio going up, saying those things too.
Yeah, and so what I wanted to add is just yes, precious metals could sell off. They could come down if the market thinks that the Fed is going to be tighter than expected. But that can only be for the next couple meetings here. And so what's really interesting is how the scenario for the Fed for the Fed to really shift its policy quickly, it's there. Like, this is not an outlandish idea, because if you look at history, there have been, I don't have the data in front of me, but there have been periods where the time from the Fed doing its last hike to its first cut, I mean, in the last cycle, that was 5 or 6 months. In other cycles, it's been like 1 to 3 months. So there is a strong history of the Fed, the time between the last hike to the first rate cut. I mean, it can only be a couple months. So it's not outlandish to have this view that possible that gold could do a V bottom here, because the Fed hikes. They hike in June, they hike in July, and then they say, oh, we're going to hike in September. The market thinks they're going to hike in September. But then suddenly, weeks later, economic data is getting worse. People are getting, sentiment is really in the dumps. The stock market's rolling over. They're not going to be hiking in that situation. Like, they're going to be saying, okay, we need to pause, and, that's how it works. I'm just saying it's very easy to envision a scenario where gold could sell off more in the next couple months, because there's a perception of the Fed being tighter than expected. But in reality, a couple months after that, they're going to have to do a 180, because the market's rolling over, data's getting worse, everybody thinks inflation's coming down, then everybody becomes concerned about growth, and then suddenly they're cutting rates before the end of the year, and gold is breaking out again. So, I mean, I don't know if I answered your question, but I think that scenario it's a possible one here over the coming months.
Oh, for sure. And we'll have to keep our eyes open to see how things unfold. And I definitely hope you'll be available to, do some follow-up interviews over the coming months here.
Yeah, absolutely. Anytime you want to have me on.
Yeah, it is. For people out there, I highly recommend go to Jordan's website, thedailygold.com. He's got a free newsletter, and I'm going to link to his most recent articles with this video, so you can find them too. Some interesting gold analog charts. Maybe we'll talk about that next time. But thanks for coming.
Hey, thanks for having me, Mike. My pleasure.